Okay, I have this trade right here on, I should have started the right one, ODFL, Old Dominion Freight Lines. On entry is on 4, the decision was on 429. I'll back up to right here, 429, second candle. Okay, I'm going to go ahead and, okay, so basically this one did not have, as far as I could see anyway, straight line information on any of the charts or on any of the markets, which made me a little bit more hesitant. It was in the Super 6, and the earnings were just in the past week. And actually there was a decline after that, and so maybe a retracement of that seemed likely. So we had straight line information up on the 233 right here, Christmas crosstalker SI. I think that's position 1 on the MACD and directional movement crossing. As far as then call the next candle on the weekly, I said white, certainly white on the first one. On the 3-day, we have auto wave line. There's a doji. This is actually 3 of 3, so it's a doji candle. Stalker SI is crossing or close enough. Yeah, and it's less than 20. I didn't count this one right here. So yeah, basically laminated right there. On the daily, I didn't see any. I said for the predictive paragraph in the 3 candle period, it will rise to the 233's 21, 13, 34 right here, and the daily's 13. You may pause there and go sideways. You may have to get out there. From there, it may rise to the dailies, declining 21, and pause. 233's 55, maybe approaching by then. Not sure about that. So I wrote down. From there, it may rise to the dailies 34 and 233's top Bollinger Band, which likely would be expanding up by then. So that's what I said. Considerations, list Super 6, earnings a week ago. End of April, year that ends in 5. I said the auto wave calculation was 150 plus 11 and 160 seems reasonable. That to the top of this bottom, top Bollinger Band. This very small spreads, $5 options. Short duration seems likely. I'm not sure why I wrote that, especially if I was saying white. Maybe I was worried about this one right here. So anyway, daily has been channeling downward. This looks like kind of a channel downward, maybe some room upwards. Okay, so I would have said options for the 155 calls, the March 16th, not the March 16th, the May 16th. So basically 2.5 weeks, selling for about $4. So the part that I'm going to draw a vertical line here just to kind of make it easy, where that was the decision point. So the next morning opened, I was nervous about this resistance right here. So I go up one candle, and you look at that big down bottom wick. So it opened down, the whole market did, went down, and this is where I have a hard time, frankly, of knowing how to handle these. Either it seems like my trades gap up, or they do this, kind of substantial sag, and that was a market-wide whole sag, like pretty substantial. So I didn't buy. So my question that I have is how to handle this. One of the questions that I have is how to take advantage or make use of the amateur hour for my benefit. Because the open at this was, 149.15. So anyway, let's just go forward as a practice. So the 7-hour rule, staying. Let's go forward to the 3-day candle, or the 3 candle rule. That's what I mean. the pause was expecting, staying. As far as the 233, we have Christmas cross. I guess not quite. I wrote that down, but the histogram is starting to shrink. Excuse me. The other resistance. This is it's not really new. And on the daily, we're on the 21 basically is resistance. So let's go forward. What I have written down is I didn't review this midday. This would be a good exit point, even with continuation. But hit the top Bollinger Band, you have the auto wave line, continuation right here, not cocked yet down here. On the daily, the green DM is cocked, it's closed above this, so I guess that wouldn't count anymore. On the 3 days on the 13, so I guess that's about 4 or 5 pieces. I think that's a good exit point right there. Even on the next one, it backed up just a tiny bit. The top Bollinger Band, auto wave line, previous one. We have now we're cocked. The red DM is kinked down. We still have continuation. The green DM is cocked over here. Top Bollinger Band is close above that top, so that the top wick didn't quite touch it, but there's continuation, and we're still on the 13th. I think this would be a good exit. So I said forward chart reading indicates this will go sideways, pull back in the near term, eating away at the time value. And the call options, even at this point, were about 880 according to Alchem charts. I didn't look it up online, but that would be 120% gain. So the entry is silver, I guess. I let fear prevent me from entering the trade. I've lost money on these kinds of trades in the past, and I'm gun shy still, so I just got to keep trying. The middle, I think, was shiny gold. The exit was gold because I didn't review on this one. But I think right there, so it was not good discipline. Despite the evaluation, I'm glad I practiced it. The question I have to face is whether I will be willing to enter a trade just like this in the future. That's the question. So that's that. And hopefully when I review this in the future, I will, right now it's the beginning of May 2025, maybe in a few months or the end of this year or in a year or so, I'll review this and say, okay, what could I learn, and et cetera, et cetera. So there we go.